Strive Inc. is currently trading at exactly 1.06 USD, showing an intraday push of positive 0.025 USD, which translates to a solid 2.42% gain on the day so far. When you look at a stock chart that is hovering just above the $1 mark, the expectation is almost always the same. You expect to see a struggling, nameless micro-cap company fighting for compliance on the Nasdaq, perhaps selling some obscure software, or trying to keep the lights on with another dilutive offering. That is the standard narrative for a stock at this price point. You expect low volume, low interest, and a business model that is barely hanging on. But the reality with Strive Inc., specifically under the ticker symbol ASST following its recent strategic maneuvers, is radically different. This is not just a penny stock trying to survive. This is arguably one of the most culturally charged and ideologically distinct financial vehicles to hit the public markets in the last decade. What you are looking at is not a dying tech firm, but a newly public asset manager that has effectively reverse-merged its way onto the exchange to test a hypothesis that very few companies dare to test, that shareholder primacy and a Bitcoin-heavy treasury are the only things that matter. The gap between the expectation of a cheap stock and the reality of a political and financial statement is where the opportunity and the extreme risk lives. This company is attempting to do for anti-ESG investing what Tesla stock did for electric vehicles, which is to force the entire industry to pay attention to a contrarian thesis. Let's look closer at the immediate price action we are seeing today, because this 2.42% move is not happening in a vacuum. The stock opened the session with noticeable buying pressure, pushing off the support levels we saw established earlier in the week around the 103 mark. We are seeing volume tick up slightly above the average, which suggests that retail traders are starting to sniff out the Bitcoin beta play inherent in this company now. You have to remember that Strive Inc. is currently navigating the volatile waters of post-merger integration. It wasn't long ago that this ticker, ASST, belonged to Asset Entities, a company focused on Discord community management and digital marketing. That business is effectively the shell that allowed Strive, the asset manager founded by Vivek Ramaswamy, to bypass a traditional IPO and get straight to trading. Today's movement is likely a reaction to the broader crypto markets and the ongoing stabilization of their new corporate identity. When you see Bitcoin moving, you are going to see Strive move. It is becoming a high beta proxy for the cryptocurrency sector, much like how NVIDIA stock often acts as a proxy for the entire AI hardware industry. The traders stepping in at $1.06 are betting that the company's pivot to a Bitcoin treasury strategy is going to act as a leveraged play on the digital asset itself. The volatility here is key to understanding the psychology of the holder base. Most people holding Apple stock or looking for a safe haven in Fidelity mutual funds are not the same people buying Strive at $1.06. The shareholder base here is composed of ideological investors and aggressive speculators. They are buying into a vision that corporate America has lost its way and that Strive is the corrective force. This creates a fascinating tension on the chart. Every time the price dips below $1.05, you see a defense force step in, likely the true believers in the mandate. But every time it rips higher, you see selling pressure from the legacy shareholders of the old Asset Entities business who are just looking for an exit liquidity event. This tug of war is what keeps the stock pinned in this volatile range, but the breakout potential is what keeps eyes on the screen. If they can successfully execute this Bitcoin treasury strategy, the $1.06 price tag might look historically low in hindsight, but that "if" is doing a lot of heavy lifting right now. To really understand what you're buying here, you have to look past the ticker and look at the engine, Strive Enterprises. This firm burst onto the scene with a very loud, very clear message. American corporations should focus on excellence, products, and services, not politics. They launched ETFs like DRLL, which is an energy fund that unapologetically supports oil and gas companies, encouraging them to drill rather than pivot to renewables simply to satisfy ESG, environmental, social, and governance scores. This was a direct challenge to the giants like BlackRock and the Schwab Intelligent Portfolios of the world that were increasingly integrating ESG criteria into their investment frameworks. Strive's argument was that by focusing on social issues, these companies were violating their fiduciary duty to maximize returns for shareholders. This message resonated with a massive segment of the population that felt alienated by corporate activism. So when you buy ASST today, you're buying into that specific worldview. You're buying a piece of a firm that actively lobbies boardrooms to ignore political pressure and focus on profits. It is a financial product wrapped in a cultural movement. However, the reality deeper layer here, and the one that forces you to rethink this trade, is their pivot to Bitcoin. Strive is not just an asset manager anymore. They are positioning themselves as a Bitcoin accumulation vehicle. They have explicitly stated their intention to hold Bitcoin on the balance sheet, mimicking the strategy that turned MicroStrategy from a boring software firm into a global phenomenon. This is where the analysis gets complex. By merging with a public company and adopting this Treasury strategy, Strive is trying to give everyday investors a way to get exposure to Bitcoin within a traditional brokerage account. If you use interactive brokers trading platforms or Robinhood Investments, you can buy ASST as a proxy for this strategy. The logic is that as the Federal Reserve continues to print currency and debase the dollar, a company that holds a hard asset like Bitcoin will see its book value explode in nominal terms. Strive is betting that orange is the new green, meaning Bitcoin is the new sustainable investment because it offers financial freedom and protection from inflation. This puts Strive in a very unique bucket. It is part asset manager, earning fees from its funds, and part hedge fund, taking massive directional bets on crypto. This hybrid model is incredibly rare. Most investing sites and robo-advisors like SoFi Invest or Betterment are designed to minimize variance and track indexes. Strive is designed to embrace variance. They want to be the anti-woke BlackRock, but they also want to be the next MicroStrategy. This dual identity is risky. If the crypto market enters a prolonged winter, the balance sheet of Strive takes a massive hit, and the stock at $1.06 could easily look expensive. Conversely, if Bitcoin goes on a run, the leverage inherent in their structure could send this stock parabolic. This is not the kind of stability you get with Fidelity Wealth Management or a standard Fidelity IRA account. This is high-octane binary outcome investing. Let's talk about the operational side. Since the merger, the company has been streamlining. They have to integrate the legacy operations of asset entities, or likely divest them, while scaling up their asset management arm. The asset management business is tough. It's a scale game. You need billions in assets under management to generate significant fee revenue, because the fees on ETFs are generally quite low. Strive has grown quickly, crossing substantial AUM milestones in record time for an independent issuer, but they are still a minnow compared to the whales. To justify a valuation significantly higher than where we are today, they need to show that they can attract sticky capital, money that stays in their funds for years, not just hot money chasing a political narrative. They need to convince financial advisors to put Strive funds into client portfolios alongside boring staples like Microsoft stock or government bonds. This is the ground game of the investment world, and it's expensive and slow. The institutional activity around ASST is currently sparse but developing. We are seeing some interest from family offices and smaller hedge funds that align with the political mission or the crypto thesis. However, the big institutional players, the Vanguards and State Streets of the world, are likely keeping their distance for now. The stock is too small, too volatile, and frankly, too controversial for many mainstream investment committees. This lack of institutional support is a double-edged sword. On one hand, it means the stock can be whipped around by retail sentiment and low liquidity. On the other hand, it means that if the company proves its concept and starts putting up undeniable numbers, the eventual entry of institutional capital would result in a massive repricing event. It's the classic early adopter risk profile. You're buying before the crowd, which means you take all the arrows if it goes wrong. We also have to consider the macroeconomic backdrop. We are in an environment where interest rates and inflation are the primary drivers of market behavior. Strive's thesis is heavily predicated on the idea that inflation will remain sticky and that real assets like oil and Bitcoin will outperform financial engineering. If the economy enters a deflationary bust, their energy-heavy and crypto-heavy thesis could suffer. However, if we enter a period of stagflation, low growth, high inflation, Strive's portfolio is theoretically designed to thrive. This makes ASST a potential hedge in a portfolio that is otherwise heavy on tech growth stocks like Tesla stock or aggressive SaaS companies. It provides a correlation